Hello dear traders, in this review we will tell you about some interesting news and relevant forecasts. You will find out whether the commodity market has managed to consolidate at its one-month high and how the Russian ruble has reacted to it. Stay tuned. This year, oil prices seem to have already reached their peak. Unlike last week when oil gained strong upside momentum, this week is marked by extremely low volatility. Oil quotes are drifting around $79 per barrel and are not going to move higher. The outlook for the next few months is rather gloomy. Over the year, the oil market has posted solid gains, increasing in value by more than 1.5 times. However, winter and shortages are not eternal. As soon as spring comes to Europe, oil quotes will most likely tumble. Nevertheless, until then, the asset still has a chance of rising above $80 per barrel, but this will hardly happen earlier than next year. In the meantime, Brent crude oil futures have been standing still for more than 50 hours. The quote is hovering between the levels of $78.50 and $80 per barrel. It looks like an accumulation process. In this case, the best trading tactic is to use a breakout strategy, counting on the price overcoming one or another boundary of the sideways range. If the price consolidates above the $80.50 mark on the 4-hour chart, the asset will most likely extend gains. If the price fixes below $78 per barrel on the 4-hour chart, it will decline. Speaking of the foreign exchange market, the ruble suffered losses. As a result, the dollar versus the Russian ruble pair advanced to the level of 74 rubles per dollar. Notably, the ruble was not supported by the news about the worsening epidemiological situation in the United States and a weaker dollar against the pound sterling and the euro. Such price behavior points to a strong speculative component. Apparently, with major players away for the New Year holidays, retail traders have more options now. On the other hand, macroeconomic data justifies the weakening of the Russian currency, although statistics have been released after the close of the trading session. Well, as for the published reports, inflation remained unchanged, while the consumer price index was expected to decline to 8.1% from 8.4%. Despite rising demand for the US dollar, the pair is still range-bound. The quotes are drifting within a sideways range, limited by the levels of 73.15 and 74.50. In order for the greenback to gain strong upside momentum, the price needs to consolidate above 74.75 rubles per dollar on the 4-hour chart. Otherwise, we will see a slight rebound followed by a resumed sideways movement. The last days of the outgoing year turned out to be unsuccessful for gold. While many assets were standing still, gold prices were falling steadily. The precious metal lost 5% of its value this year. Although this decline is insignificant, many are now wondering whether gold will be able to claw back lost ground at all. Apparently, gold is no longer considered to be a safe haven asset. It has become a common financial instrument which depends on monetary policy in the US. The asset has lost its luster. This raises the following question: will gold be able to regain it next year? From a technical point of view, gold futures continue correcting from the resistance level of $1,820 per troy ounce. The metal's downward movement may be limited by the area of $1,785 – $1,790. Until these levels are broken, there is a risk that the correction may come to an end. Well, that was the forecast for the end of the year from our analysts. May your 2022 trading be lucrative. Have a nice trading day. See you back soon.